Don't say that I didn't warn you. I tried to warn people, and I feel like this is one of those videos that you're going to watch and you're going to want to bookmark because you're going to want to refer back to this because it might be a video that you watch and then a few years from now you're like, I'm so glad that I watched it and I listened to what Anthony said. Or you might a few years from now look back and say, I wish I'd listened to Anthony. Now, at the airing of this video, when I'm recording right now, we are on our like eighth or ninth prime minister in about as many years, in about 10 years. There's a lot of change happening. And now the whole conversation about right to buy and right to buy discounts is up and it's in the news again. And it's in the headlines because there's some new proposals. There's some things that they're talking about that if they happen, you're going to want to make sure that you are at the head of the line and you're in the front of the curve because these things will be groundbreaking. It's not only going to affect people who have council right to buy properties, but it will impact everybody. So make sure you watch this video all the way to the end because I'm going to be talking through the things that have been proposed. As always, always remember that if you do not keep up the payments on your mortgage, your home may be repossessed. These videos are not made to replace speaking to a professional. They're for guidance. They're not tax advice, legal advice, or financial advice. But make sure you watch to the end because I'll break everything down really well for you. My name is Anthony Lindsay, and today we're going to be talking through some of the proposed changes for the right to buy scheme. I do want to stress that they're proposed. None of them have been put into practice at this point. But as I said, you're going to want to bookmark this video because I imagine that there'll be a lot of changes. In November of 2024, right to buy changed forever. And what ended up happening is a lot of people were trying to get their applications in before the changes happened. I'm in 2026 at the time of this video, and some of the applications I started early in 2025 still have not been completed because the council is backed up. So what if right to buy were to end tomorrow? What would you do if right to buy ended tomorrow? Would you regret not actually completing a right to buy application? Would you look back and say, man, I could have bought my right to buy property, I could have bought my council property, but because I dragged my feet or I didn't get my act together, I missed out on 1,000, 10,000, 15, 20, whatever it will be in the future. But if you had actually done your application before November of 2024, then you would have been able to get up to £136,000. So don't make this one of those things where you've missed out on that. And then because you don't take action, you end up missing out on anything that comes up in the future. So let's just talk through what some of the proposed changes are. So why is right to buy being discussed again? So supporters of the reform, so they're looking at some reforms to right to buy. What they're thinking about is, as you know, not just in the UK, but specifically in the UK, there's a housing shortage. So they're saying we need to build more houses. Now, we know we need to build more houses. That's kind of like a thing that everybody realizes. But what Andy Burnham or someone in his camp is saying, we not only need to build more houses, but we need to look at how the current stock is being used. So they're proposing some changes to the right to buy to ensure that it's fit for purpose in 2026 and beyond. So some of the things that they're looking at is that too many homes are being sold and not replaced. Local authorities need greater flexibility, and councils need more affordable housing. So what they want to do is start looking at the housing that they currently have and reassessing how it's being viewed. So some of the things, and this is really important, some of the things that they're talking about changing with the right to buy is reducing the amount of the discount. Now, this will be huge because, as you know, you can use the discount as your deposit. But especially if you live in London, you're in a situation where you're in a really expensive home, the discount that you're getting could be the only thing that makes it even somewhat affordable for you. So that's one of the things that they're looking at doing. What's something else that they're looking at doing? They're looking at increasing the time you have to wait to be eligible and increasing the time that you have to wait before you can sell. And why are these things important? Both of those things are really important because I'll be honest, when I'm doing a right to buy application for someone, one of the first questions they ask is, how long do I have to hold on to the property before I can sell it? Now, that's not what right to buy is actually about. However, it is a question that people ask. And the other part is, how long do I have to wait before I'm eligible to purchase my right to buy? So if they adjust those things, so if they say, well, and I'm just pulling a number out of the sky, you have to be in the property for 10 years before you're eligible to purchase it, that's going to knock a lot of people out of the frame. Or if they say you have to have it an additional 10 years before you can sell it or release any equity, that can change the landscape. But most importantly, if they just say that they're going to reduce the discount, that will be a huge impact on most people who are looking to get a right to buy property. So, what this could mean to you: smaller discount. So the smaller the discount, the more you're going to need to come up with for the mortgage. So that's going to be really important. Different eligibility rules, as I discussed, longer qualifying periods, regional differences, and more restrictions. So right now, buying a right to buy property is somewhat straightforward. So if you're looking to buy your right to buy property, in most cases, you complete the application, you get an RTB1 letter. It tells you the valuation of the property, how much the discount is, and then the amount that is left, so the amount that it is after the discount, that's how much you need for a mortgage. But if they make it more difficult, so if they're doing additional checks to your income or your savings or things that may impact your ability to buy, these are things that you're going to want to address before the changes. So if you think you are eligible, or even if you don't, to purchase your right to buy property, complete the application now. Do not wait for the changes. Because as I said, I've been talking about this for the last 18 months. And now that the government is changing, they're already talking about changes. And what will happen if there are changes? Everybody's going to be completing applications. It's going to mean that you're going to be delayed, and a lot of stuff can change within the time that you're waiting for the application to be reviewed and assessed and to get your mortgage. I've seen it happen. People start the application late and then they end up losing out because circumstances change. Maybe they lose a job or anything can happen. So make sure, if you are in a council property and you think you might be eligible, just start the process. Speak to a mortgage broker. Don't wait, because you might regret waiting. So, as I said, the key things to think about are the potential changes and making sure that you get up and running soon. Talking to a mortgage broker is one of the first things that you're going to want to do. You want to make sure and speak to a mortgage broker, not because you know you can get a mortgage, but you want to understand the process. You don't want to wait. And this is why I've been encouraging people to act now, because for over 18 months, I've been talking about it, not because the changes were coming, but it just seemed like it was something that was going to happen. So I've been encouraging people, make sure you bookmark this video, because I have a feeling that you or someone you know that's in a council property is going to need this information. So the opportunity is today. One of the things that I love about right to buy properties is it can be life changing. A right to buy property purchase can be one of those things that can increase generational wealth, because you get to get on the property ladder with the government helping you with the deposit through the discount. So I love doing right to buy mortgages. I love assisting families. I love getting people on the property ladder. And once you're on that property ladder and you have that equity, it just means that the future is a lot brighter for you, your children, and your children's children. So the opportunity is there now. There's no guarantee that the right to buy scheme will always exist, and certainly no guarantee that it will exist in its current form for an indefinite period of time. So make sure you take this chance. You make the best of this opportunity to buy your council property. It can mean that your family has a property in your name that you can pass on to them. So make sure you take this seriously. Don't delay. Don't talk yourself out of it. I see this a lot. People talk to family and friends and they figure that they can't get it. So they assume that they have plenty of time. So it will always be there. I'll get around to it when I get around to it. Don't think that. They don't check their eligibility. So this is where I say, do not talk to friends and family about mortgage, legal, or medical stuff. Don't go online for those things either. So what you will see is well-intentioned friends, family, your barber, your hairstylist will say, oh, this is how it works. But if they're not a full-time mortgage broker, do not take their advice. And even if they are a full-time mortgage broker or professional, unless they know your specific circumstances, you shouldn't be taking their advice either. So you don't want to make the common mistakes that people make, which is waiting, not exploring, talking to the wrong people, or just assuming that they can't get a discounted purchase on their right to buy property because they're not eligible. So always talk to the right people. Always make sure that you check the policies and the guidelines. That way, you can set yourself up for success. So, what should you do now? What we want to talk through now is what you should do now. So, the first thing you want to do is check whether you're eligible. You can check whether you're eligible by contacting your local council. The next thing that you want to do is find out what the current discount is, review your credit file, and speak to an experienced mortgage broker who specializes in right to buy properties. I'll be honest with you, when I first started my mortgage career, I just dealt mostly with high net worth individuals buying houses of 1.5, 1.7 million. So even if someone came to me for a right to buy mortgage, even though I understood and understand mortgages, I wasn't able to give them the best advice when it came to a right to buy purchase. Right to buy purchases are a little bit different. And so you need someone who specializes in it. The other thing that I would say you do now is by looking at your credit report. If you need to tidy anything up, you can get those things tidied up, because although you're getting a huge discount or maybe a small discount, even though you're getting a discount and the discount can be used for the deposit, you still need to qualify for the mortgage. It's different up north than where I am in London, because quite often, even after the discount, the mortgage that's required is quite high. And I will be going through the criteria that you need to meet to get a mortgage. So make sure that you watch this until the end. But first, I'm going to go through some of the frequently asked questions. So the first question that I get asked all the time is, can I buy with bad credit? So people ask me, can I buy with bad credit? So the answer, as with most things mortgage related, is I don't know until I talk to you. It's not impossible to get a mortgage with bad credit, but in most cases, you're going to need to go to a specialist lender. And there's nothing wrong with a specialist lender. They're there to support people who may have had some bumps, especially coming out of COVID. We find that a lot of people had issues. Maybe they lost their jobs. They were living off savings. So yes, you can buy in most cases with bad credit, but you're going to want to speak to someone. Another question that people ask is, can family help and do I need to save? So can family help and do you need to save? Yes, family can help. Now, one of the things that you're going to want to talk to the mortgage broker about before you start the mortgage process for a right to buy is who should be on the application, who's eligible to be on the application. Because in most cases, there's one bank that actually will do an exception on this. But in most cases, whoever's on the right to buy letter has to be on the mortgage. So if it's you, your wife, and a child that's on the right to buy letter, then all three of you need to be on the mortgage. I had a case recently where we had 3 people on the application, 3 people on the right to buy letter, but they didn't meet the affordability criteria, so they needed to add another person. There's one lender in the UK that will do what's called joint borrower, sole proprietor, along with a right to buy mortgage. So if you need that, make sure you check out my video on that, or you reach out to me. So the question, can family help? Yes. Do you need to save? Well, who knows? You are going to need money to make the purchase, even if you use the deposit as the discount as the deposit. And what I mean by that, you're going to need to pay my fees. You're going to need to pay solicitor fees. You may need to pay product fees. There's different things and fees that are associated with purchasing a property. So you should have some savings put to the side. The other tip that I will give you is, if you have some small things that you're paying out on, small credit card bills or anything of that nature, I'd say clear them. It's better to have lower savings and no outgoings than to have outgoings that are high and have savings. So that would be a tip. Those are two of the common questions that I get asked. Another question that I get asked is, how long does the process take? The process takes as long as the slowest person. But what I would say is it depends on what council you're working with. Some councils are quite fast, some are really slow, some clients are really slow. It takes a while for them to complete the paperwork. But do keep in mind the council is going to give you a deadline. So that's why you should speak to a mortgage broker first. That way you can gather all of the bits and pieces that you need. You can make sure everything's in place, that you do not miss the deadlines that the council is giving you. Every case is different. So the answers to these questions will be unique to you, but those are the common questions that I get asked. Here are a few final thoughts about getting a right to buy mortgage and making sure you do it before these changes that are being proposed come into place. So don't assume that it will always be there. Nobody can predict the future or government policy. So if you think you are eligible, or even if you don't, make sure you start the process. What we need to do is make sure that your current right to buy application is completed with the right names on it. So speak to a mortgage broker to make sure that you have the right names on the right to buy. Speak to a mortgage broker early. I'd say that some of the key things that cause problems for my clients when they're getting a right to buy mortgage, even before these proposed changes, is they have things on their credit report that they weren't aware of. So CCJs, missed payments, payment arrangements. Quite frequently, especially for older people, you have children or grandchildren that may have had them co-sign for something, and then they default and it's on your credit report as the parent or grandparent. So get your credit report. You know what I'm going to say now. Check your credit report at least once a year and read it thoroughly. Don't go to Equifax. Don't go to Experian. When you're checking your credit report, make sure you get your Check My File credit report, because the Check My File credit report is an extensive, comprehensive, combined credit report where you'll be able to see everything on your credit profile. Remember, it's not your credit score. It's not your credit score. It's your credit profile. Just recently, I had a client with quite a high credit score. It was in the 800s. However, she had a settlement a year and a bit ago. So because it was a year and a bit ago and it was clear the credit score was high, but because she had that settlement, a lot of lenders wouldn't look at it. So we still ended up with a specialist lender. So make sure you look at those things in advance. Don't wait to get started. Contact the council, speak to a mortgage broker, clean up your credit, and confirm who should be on the application. So the key changes that are being proposed right now is the discounted amount on the property. So the council right to buy discount, they're looking at reducing it. They're looking at making it that you have to wait longer before you're eligible to buy. Another change that they're making is it might be once you do buy, you have to wait longer before you can sell. They're looking at additional checks to see if you actually qualify. So maybe you're making too much. Maybe you have too much in savings. These are all the different things that they're having a discussion about. But what you want to keep in mind, don't wait until the changes happen. Act now. Speak to a mortgage broker now. My name is Anthony Lindsay, and I make these videos to explain things, give you information that you can make an informed choice. Hopefully, you found the information useful. And if you have, please share this video. Even if you don't own a council property, you probably know someone that's in a council property. So make sure you share the video. Also, I make videos based on what I see going on in the news or what my clients are asking me. So if you have a topic that you'd like for me to discuss, please put that in the comments. And please subscribe. It's a really small channel. I invest a lot of time in making these videos to inform people. And by subscribing, it just means that the YouTube algorithm will know that what I'm doing is important to you. So make sure you like, subscribe, make sure you follow, and share this with family and friends. Hi, I'm Anthony Lindsay, and I make videos that explain things about mortgages, the mortgage process, how to get a mortgage, how to qualify for a mortgage. And today, I'm just going to talk about the mistakes that right to buy applicants make. So, one of the key mistakes that right to buy applicants make is not thinking about the additional costs involved in getting a mortgage. When you're buying a right to buy property, you can use the discount as the deposit, but there's still other fees that you need to pay out of your pocket. I have found people who are saving through a right to buy ISA. If you have a right to buy ISA, or should I say a lifetime ISA, so a lifetime ISA, if you have a lifetime ISA, do keep in mind that the money in that lifetime ISA or LISA is not given directly to you. That money is part of the completion transaction. So if you're saving all of your money in a lifetime ISA and you want to use that towards the purchase, do keep in mind it's not cash money that you'll be able to pay the broker or pay the solicitor. So make sure you have some cash in reserve to make the purchase. So not having the right names on the right to buy application. Before you start the mortgage process, it's good to speak to a mortgage broker that they can crunch the numbers to see how much income you're going to need to make the purchase. So what we'll look at is the assessed property price. We'll look at what the maximum discount you might be qualified for is, and then we'll find out how much of a mortgage that you need. A good rule of thumb when you're trying to figure out how much of a mortgage you can get is you take the combined salary of everyone that's going to be on the application, you multiply it by 4. That's going to give you the amount that you can get for a mortgage. So let's just say the combined salaries are 50,000. 50 times 4 would be 200,000. So based on the salary, you could get a mortgage of 200,000. However, you're going to need a deposit. So you take that 200,000, add your deposit, and that's how much the house price is. So 200,000, and let's just say you had a 20,000 pound deposit, you'd be looking at houses for 220,000 pounds. That's a quick rule of thumb. The reason why I use that is because it will put you in the ballpark. Don't look at Rightmove. Don't look at Zoopla. Don't listen to family and friends about 6-time income multiple and 4.5. Not everybody's going to qualify for those. So I would say a good rule of thumb, take the combined salary, multiply it by 4. Things like if someone is self-employed or if somebody has poor credit, those things will impact it. But that formula you will find will get you closer to where you need to be as far as understanding how much you qualify for. And these are some of the things that speaking to a broker will do for you. If you go directly to your bank, you're not saving money in most cases. So I do find that people are like, well, you're a broker, you're going to charge me a fee. Yes, I am. The reason why I charge you a fee is because a broker does more than just get you a mortgage. Especially in my case, I will help you negotiate the deal. You don't negotiate the purchase on a right to buy. But if you are doing a traditional purchase, I can help you negotiate it. I can support you with some of the admin. I will assist you in finding a solicitor. There's lots of things that a mortgage broker does that a bank staff member is not going to do. So yes, you will pay a broker a fee. And yes, the banks pay the broker what's called a procuration fee as well. So we do make money. We are professionals. However, the amount that you're paying to purchase the house compared to the fee that you're going to pay the broker is nominal. And a good broker is going to not only find you the best deal, but they're going to take away a lot of the stress. The other thing is if you go directly to your bank, you're only going to get the best rate that that bank can offer. So I've been a bank manager for several brands and my staff are amazing and you would come in, you get great service. However, if you go into bank A and they say this is my best rate, it may be their best rate, but it doesn't mean it's the best rate on the market. So go into a broker, they'll be able to compare, explain, and support you. So that's a key mistake that I see people make. They think they're saving money by going directly to the bank. And especially with something like a right to buy mortgage, you want to speak to a broker because not every bank does right to buy mortgages. And even the ones that do may not specialize in them. So you might not end up getting the broker, you might not end up getting the best rate. And another mistake that I see people make is paying the broker in advance. I would say do not pay the broker in advance. And this isn't because brokers are dishonest and they just want to take your money. But if you pay the broker in advance and for whatever reason they're unable to get you your mortgage, you're out of pocket. So that's why we work a little bit different. We do not charge any upfront fees. So we will get you the agreement in principle. We will get you the offer. We don't charge you until after we have delivered on a service. So no upfront fees. So I would caution you, if you go to a broker, they're like, send me £700 and I'll get this done for you. I'd caution that, because you could be out of pocket if they're unable to get you the mortgage. Another key mistake that people make is not reading or completing the documents. So make sure you read the documents. If you don't understand the documents, your broker is there to help you understand them. There are no silly questions, and it's such a big purchase. You don't want to go into it not understanding. Don't miss deadlines. Put some time aside to complete the fact find, to prepare the documents, to send the documents. Gather the documents in advance. It's very straightforward, and most of the documents are available online. So you need 3 months bank statements, 3 months pay slips, proof of ID, sometimes a P60. You need a copy of your credit report, and you need proof of deposit, not for a right to buy, but if you're buying a traditional home. Those are the key pieces of documentation. As I said, most of them are available online. Make sure that you provide the most recent items. So usually you need the last 3 months, the most recent 3 months. Another mistake that people make is not being open and honest. A good broker can figure everything out. We look at numbers every day. We look at people's bank accounts every day. So we can figure out what's going on. So it's good to just be open and honest, and don't listen to friends and family, because they will steer you wrong a lot of the time. I'm going to go through the key stages of getting a mortgage when I come back. So make sure that you watch until the end. So, what are the key stages of getting a mortgage? Stage number one is an agreement in principle, but an agreement in principle is not a mortgage offer. The reason why I say that, all the time, I have people come to me and say that their broker or their bank got them an agreement in principle, but then when they went to go purchase the property, they couldn't get the offer. So, you want to work with someone that has a process where they do the due diligence before getting an agreement in principle. An agreement in principle is sometimes referred to as a mortgage in principle or an offer in principle. But keep in mind, an agreement in principle is not a guarantee that you'll be able to get an offer. So you want to make sure that whoever's getting the agreement in principle for you is sanity checking it, doing the criteria, and making sure it can convert into an offer. The other thing to keep in mind, an agreement in principle is against the client. It's not against the property. Just recently, I had a client had an agreement in principle by one of the top banks. Then they found a property. The property that they found was really close to a gas station. Therefore, the lender would not lend on that property. So it's not that the lender wouldn't lend, they wouldn't lend on that specific property. So an agreement in principle is against the individual, and it's not a credit assessment. Once you have a mortgage, a purchase offer accepted, so the seller's agreed to sell you for a specific price, that's when you do a full mortgage application. This is also when the valuation is done. It's a valuation and not a survey. What's the difference? The valuation is the bank assessing how much they think the property is worth. There's three outcomes that you can get from that. When the valuation is done, it can come in at the agreed purchase price. That's great. It can come in above the agreed purchase price. That's even better. But if it comes in below the agreed purchase price, that can be problematic, because it might mean that you need to increase your deposit, or mean that you have to do a different product, which might have a different interest rate. During the valuation, and once it's in, They will do underwriting. That usually takes about 10 to 15 business days, depending on the complexity of the case. The underwriting is when they then collect your pay slips, bank statements, all of the different documents that we will already have and have assessed before we did the agreement in principle. Once the lender is happy and satisfied with the property, they've already said that they're happy with the individual at the agreement in principle stage. Once they've agreed that they're happy with the individual and the property, they'll do a mortgage offer. Once the mortgage offer happens, the broker's job is pretty much done, because from there it goes over to the solicitors. Both solicitors will talk to each other, do searches, etc. Then you have exchange, then you have completion. The full checklist of what you're going to need is, in most cases, you're going to need 3 months bank statements. If you're self-employed, you're going to need SA 302, and you're going to need tax overview for 2 years. Some lenders will accept one, but in most cases, you need two. You need a credit report. I'd say get it from Check My File. You're going to need proof of address. So that's a utility bill. It's not a bank statement, because you can't use the same thing for two different parts of your fact find. So you need a utility bill, council tax. You're going to need proof of identity, proof of your deposit, and the name of your solicitor. So this is where I tell people on the first conversation, I usually introduce them to a solicitor, because the solicitor is something that can take a while to find. But when you get to the stage of full mortgage application, you're going to need to name your solicitor. So make sure you find your solicitor early. Those are the key things that you're going to need. So I would say, before you speak to your broker, start to gather those things. My name is Anthony Lindsay, and I make these videos not to give financial, legal, or tax advice, but to explain how mortgages work, how finance works. If you found this video useful, if you've watched any part of it, please like, share, and subscribe. Share it with friends and family. I'm not here to pressure or to sell, but just to explain things. So these videos, I know they're a little bit longer than TikTok videos, but they are designed to give you more information that you can be an informed consumer. I make these videos based on the questions that my clients are asking or things that I'm seeing in the news. If you book an appointment with me, I don't charge for the conversation, and you'll be speaking to me. I'm not an avatar. I'm not an AI. I'm a real licensed mortgage broker in the UK. I work all the way across the UK. So you won't get through to a PA or a VA. You'll get through directly to me. And I'm always happy to answer your questions. I appreciate you watching, but I'd really love it if you shared this video with someone.